Imagine a marketplace worth a staggering $25.8 trillion. This isn't science fiction, but the reality of the US Treasury market. It's a vital cog in the global financial machine, a place where the government raises capital to fund its operations and where investors seek safety in times of financial turbulence. Treasury securities, whether they are bills, notes, or bonds, are considered some of the safest investments around, backed by the full faith and credit of the US government. But even this colossal and crucial market isn't without its flaws. As highlighted in a recent Bloomberg article, there's a growing consensus that the Treasury market is in dire need of reform. So a $25.8 trillion market is in need of reform. But what exactly needs to change and why? The Treasury market is not just a financial behemoth, it's also a complex entity. 4 key reforms are being proposed to streamline its operations. First, the call for increased transparency. The Treasury market is a maze of transactions, and this reform aims to shed light on its inner workings. Increased transparency means more accessible and understandable information, paving the way for informed decision-making and risk management. It's like turning on a flashlight in a dark room, illuminating the path for all market players. The second reform is the introduction of central clearing. This aims to reduce the risk of counterparty defaults, which can have a domino effect on the Treasury market. Central clearing acts as a middleman, assuming the risk in case a party fails to fulfill their obligations. It's like having a safety net, catching any potential fallouts and preventing them from spreading. Thirdly, there's a push for standardized trading practices. Currently, trading practices vary widely, leading to inefficiencies and confusion. Standardization is like speaking the same language, ensuring everyone is on the same page, fostering smoother transactions and reducing misunderstandings. Lastly, the reform for enhanced regulatory oversight. This is about keeping a closer eye on the Treasury market, ensuring it operates within the law and the highest ethical standards. Enhanced regulatory oversight is like a vigilant guardian, keeping watch and ensuring that everything is in order. These reforms, though seemingly complex, aim to bring simplicity and efficiency to a market that impacts us all. Scene script. Change often brings resistance, but it also brings opportunity. So what could these reforms mean for you and the wider financial world? Let's break it down. First off, the individual investors. The reforms could potentially increase transparency in the Treasury market, making it easier for you, the individual investor, to navigate and understand. This could result in smarter investment decisions and potentially higher returns. For financial institutions, the reforms could have a twofold impact. On one hand, the increase in transparency and oversight could potentially limit certain trading practices, which could impact profitability. On the other hand, these changes could foster a more stable and predictable market, reducing the risk of sudden market shocks and financial crises. It's a trade-off, but one that could ultimately lead to a more robust and resilient financial system. And what about governments? Well, the Treasury market is a crucial tool for governments to finance their operations and manage their debts. Any reforms that improve the functioning and stability of this market could therefore have significant implications for government finances. For instance, greater transparency could potentially lower borrowing costs, providing governments with more fiscal space to invest in public goods and services. However, it's important to note that these are potential effects. The actual impact will depend on a multitude of factors, including how the reforms are implemented and how the market participants respond. There are risks involved, as with any change. Increased regulation could potentially stifle innovation and limit market dynamism. There's also the risk that the reforms could inadvertently create new loopholes or vulnerabilities. But let's not forget the potential rewards. A more transparent, stable, and resilient Treasury market could benefit all stakeholders in the long run. It could foster greater confidence in the financial system, encourage more participation from individual investors, and support economic growth and stability. Change is never easy, but in the world of finance, it's often necessary for growth and stability. The Treasury market may seem distant from our daily lives, but its impact is far-reaching. Today, we've delved into the depths of a $25.8 trillion market that's in dire need of reform. We've explored the 4 key changes that are necessary to make this market more efficient and fair for all involved. Understanding these reforms and their potential impact isn't just for financial gurus. It's crucial for anyone who wants to grasp how our economy works and how it could be improved. Remember, knowledge is power. The more we understand about the world of finance, the better prepared we are for the future. In a world where financial landscapes are constantly evolving, staying informed is not just an option, but a necessity. And that's precisely where we come in. We aim to provide you with the insights and updates that will keep you ahead of the curve, empowering you with the knowledge you need to navigate the intricate labyrinth of finance. Stay informed, stay ahead. Don't forget to subscribe for more insights and updates on the world of finance.